We can start.
Yeah. So, good morning, everybody. And at the outset, let me wish everybody a very happy new year. Hopefully, this year will be adventurous, it will be money minting, and it will be wealth building for all of us. So, with that kind of positive outlook or with positivity, let's start the analysis. Hopefully, you have had a wonderful, safe journey through the desert snowstorm, and everybody is safe and secure. Had a good long weekend. So before you start off your working from tomorrow, let's analyze what the week has been and what the week is expected to be. Right? So all white all around you where you are based, and let's try to bring in some cheer into that activity. Right? So with that basic things, let me first start with Dow Jones. As we always do, we will initiate our discussion on Dow Jones first, weekly chart, take it to day chart, then check NASDAQ, and then check TSX for the same thing. You all can see my chart of Dow Jones on your screen. This is the weekly chart which is available to you. If you can see very carefully, Dow Jones in the weekly chart has been in the sideways consolidation for quite some time.
Sir, sorry to interrupt. This is the day chart.
Oh, sorry, very sorry. Yes, this is the weekly chart here. But in the weekly chart also has been consolidating for the last almost 2.5 weeks. It's too early to draw this box here. But yes, this is the level in which it is consolidating. Why is it not able to draw? Right? This is the level that is consolidating it. If you watch it very carefully, the levels are known to you very clearly. 2 weeks, just a week on the in the second week of December was there, but otherwise consolidating between these two levels only. Right? So, what is it indicating to us? It's indicating only one small, simple thing: consolidation happening at the fag end of the year. Primarily because institutions were not there for the last 1 week, and they were already winding it down in the third week of December. So you see this consolidation in the base happening. Now, anybody wants to trade Dow Jones, 32,651, about 650 points down would be the perfect time to buy this. And then take it for a target of 34,300, 34,350, 400. However, your current price on the weekly chart is below your 8 moving average, but above your 20 moving average and your 40 moving average. So 20 and 40 both are running parallel, and they will act like your support to bounce it off. So anybody buying it at 32,500, your stop loss is clear. 32,400 is your stop loss. So you're buying it at 32,500 with a 100-point stop loss for a target of 34,400. This is what the broad market is talking about. Right? Only if you must buy it. Now, all that decision to buy or not to buy will all depend upon seeing a clear reversal happening, not before that. Because the indicators are still not talking about reversals. Your MACD is on a bearish crossover. CCI is at 46. but flattening. Stochastic has already given you a bearish crossover. So this can come down, but the ideal place to buy this would be around over here at 31,000 at the super trend level from where you would bounce back. So you can expect another 2,000 points dip in Dow Jones. Don't expect this in the first week or second week of Jan, but the trend is going to be going down if and only if 32,200 gets broken conclusively on a closing basis. If it bounces back from your 20 and 40 moving average, then of course your upper targets are clearly identified. This is what the weekly chart is telling you. This weekly candle is also saying upward price rejection. Now watch this happening on day chart. Pure consolidation right from 19th of December to date. So last 2 weeks of very strong, narrow trading range. Very strong, but narrow trading range. And at the same time, one would realize that though you are trading in a narrow range, your volumes also are very, very small. Your volumes are also pretty small. Look at this volumes. Practically dead volumes. 303 million, which is practically nothing as compared to this over here. 756 million. Look at this, 500 million. So 303 or 3 million or 300 million shares on Dow Jones is a very, very low volume chart. Why is it not moving? Yes. Right? Here, the good thing about the super trend is telling you on the day chart is the super trend, the bearish super trend has turned flat over the last 2 weeks. So it's clearly inviting it. The super trend turning flat, number one. Number two, price being held at 8 moving average, simple 8 moving average. And 20 and 40 are very close above. 20 and 40 both are at about 33,400 and 33,500 respectively. So they are within hitting distances or striking distances. If that bounce happens, super trend gets broken upward, gives you a positive breakout. That is the way it is. That is why I said, if you get a chance on the weekly chart, you will buy it at the base levels for an upper target. If you get a chance, buy it at this 3 weeks constant low at 32,500 or 32,700, around this level with bare minimum stop loss. For a target, straight over here, 34,000. That's about another 1,500 points. And why do we say this? Because this is clearly indicating it over here. The day chart is close. Your lower Bollinger Band is as good as a 200-day moving average, which is 32,400. Right? This is Dow Jones for you. As compared to this, NASDAQ on a weekly chart is looking bearishly down. Look at this candle, last 4 candles on a weekly chart, bearishly down. The last week did give you a turnaround or some signs of hope. But your indicators are not talking about that yet. Your MACD is still talking about a negative, a bearish crossover. Stochastic clearly turned down and CCI also clearly turned down, and the super trend has also curved down. Though you have seen this green candle in the last week, it is still looking bearish to me. So this will be your, if you must buy, your target is only 1,000 points away from on NASDAQ. Otherwise, I would like to see it going further down and bouncing back. It has already tested this level earlier, 10,100 or 10,000, and bounced back from there. So you could look to buy it somewhere around 10,100 for a small target of 11,400. But that will be weekly targets. So weekly interval, long drawn targets. But that becomes a good place to buy it at. And your stop loss will be over here, 10,050. You can buy it at 10,100, $50 stop loss, target of 1,400 points above that. But long call, long distance, these are weekly targets. So they will not be achieved in 1 week or 2 weeks. It could take almost a month or 6 weeks from now, whenever this is entered in. But this is looking bearish. On the day chart, the trend is still, super trend is still bearish. He's bounced off from here, which is 10,200. If I remember well, last weekend also we gave you the same levels of 10,200, 10,100 to buy NASDAQ at. So if you had bought it at 10,200, you would have clearly made $260 or $270 profit per lot in just 3 days. Right? In the day chart also, crossover has not yet happened, but histogram has turned positive. Crossover just about to happen on MACD. CCI is still at minus 82. Stochastic has given you a crossover, but I would expect this level to be tested again because I still am of the opinion NASDAQ is weaker as compared to Dow Jones. So 10,100, 10,150, 10,200, great place to buy. Stop loss will be 10,050, which is the low over here. The low here was 10,088. Our stop loss is 10,050. Clear? Now come back to TSX, the Canadian index. Like Dow Jones, same thing, weekly chart, super trend is bullish, negative crossover on MACD, CCI almost zero, minus 12 is almost zero, stochastic is still showing you a negative crossover. Right? So price can be expected to come down to the super trend level, which is 18,750. That's almost about 550 or 600 points away. It may come down to this level. Good point to buy, 18,750, 18,800. Good place to buy. Target 20,500. Right? Stop loss, if you buy at 18,700 or 18,500, this low of 17,873 or 17,850. Because in case if this breaks, it will go further down. Weekly chart, day chart, the negative trend, super trend has turned flattish and your markets were in sideways movement. It's touched the mid Bollinger Band, gone out, brought in, consolidating over here. Now it's at a make or break situation. If it moves towards the 20 moving average, it will test the super trend, failing which it can always come down. So at this point of time, my suggestion would be don't be in a hurry to enter a trade just now. Might as well wait and watch. If this gives you a breakout, this box gives you a box breakout. on the TSX levels. If this gives you a breakout on the positive side, your first target is 19,900, the super trend levels, which is still about 550 points away. And if that breaks out, then your trend goes higher up for 20,400 and above. But this box breakout on the day chart is a must. This can always break out on the negative side and go further down. Why do we say that? Because this trend is still continuing in a bearish movement. If I can draw you that quick line. You can always come down like this. So breaking out of the trend line, breaking out of the box is very important for TSX to take an uptick and go all the way back up to here, 20,600. So if it breaks out, first target is 19,900. Next target is over here, 20,400, and then 20,600. But breaking out of the, limited to only two conditions. First, breaking out of the box, breaking out of the super trend, changing the trend levels, and then going up. The trend is also at the 20 moving average. So it becomes not one, but a three-tiered resistance by the 20 moving average, the 40 moving average, and the super trend, all four talking about the resistance being done at 19,900. Right?
Sir, I just wanted to add something. Interestingly, there are a couple of, indexes on Toronto, the banking index, the energy index, real estate, so that I keep looking at. Interestingly, most of the indexes also, sectoral indexes also, are either sitting at a support of 34 moving average or a resistance of a 34 moving average. So
Very
I think
true.
these couple of weeks are going to be very interesting.
Very
And like you
interesting.
said, they would either be make or break. So
Absolutely.
even the indexes are sitting on the daily chart, they're sitting at a 34 moving
34
average
and
that I
34, 40
so yeah, I
moving.
think 34.40 is very close. So
Yeah,
I think it
they are
lines up
very
very
close.
well. It lines up very well with what you just said. So
Absolutely.
yeah.
So thank you for the confirmation, Gaurav. But that's the way it would be. We have to look forward for it. So my suggestion to you would be very clear. Let's not be in a hurry to enter a trade. I would rather watch. I could also use selling at the super trend levels and bringing it down. Again, that would be a very, very small with a very, very minor stop loss. So I could always sell TSX at 19,900. I could always sell Dow Jones at 34,000. Let it rally up. But if it breaks this level of 34,400, I'm getting a 600-point rally before I will sell it off. So I might as well use the rally to earn the 600 points, then sell at 34 and bring it down. So your buy is also clear. Anything above 33,400, you are a good buyer. Buyer for a target of 34,000, 34,100. At 34,100, for all your trades, please take profits home and then wait for a fresh breakout to happen above the super trend. Else, if you sell over here, you will again get a chance to buy back at 32,600 or 32,800. Very comfortably. This will go up and this will come down. These are day charts. Same thing is on NASDAQ. NASDAQ is definitely falling. So this is the way it is. You will sell it at 10,900 or 10,850. Very small or negligible stop loss. Bring it to a target, 10,100. So that will always work it that way. Right? So we have a request of QQQ and DIA. So let's take QQQ first.
Yes.
QQ, I'll take it on here because QQQ will be pretty similar to
NASDAQ.
And as you can see, it is pretty similar. Look at the chart formation of QQQ and look at the chart formation of NASDAQ. It's a derived index of the original NASDAQ. So pretty much similar activity. In QQQ, what would I do? You have seen it coming out. You've seen it consolidating. If this breaks at 260, 268 or 290 or 280, I would be a buyer for it. Target 276. Sorry, not 290. At this phase, 267. Take a good buy. Target 277, 280. Because the super trend definitely is going to be a resistance for this. Price is currently just below or just at the 8 moving average. So if the price moves up, your 20 moving average, 278, 276 will be your first targets. If that is achieved, next target is the upper Bollinger Band, which is 294. So either it's 294 or it could be, 294, which is the high over here, this side. So you could be looking to buy this, but if you're buying it at the current market price, the low over here was 259.73. Your stop loss is 259. If you're buying it at the current price, 259 is your stop loss, because if that breaks, then this will go further down, as can be seen in your weekly chart. If it breaks, 250 is this thing, 254 and lower can easily be touched. Or the right approach would be wait for it to correct up to 255, buy it over there. But by that time, the other technical indicators will let you know what is happening. Are they reversing or not? Because this low over here as 254 could be tested and either taken out or could be bouncing back from 255 to 56. Clear? All right, let's take the next one. One second, let me ask her. Sunita, is that clear or you have any questions further on it?
Yeah, that's clear. Yeah,
lovely.
Thank you.
Most welcome. DIA is this one? SPDR.
Yes.
This would be exactly like your Dow Jones, if I'm not mistaken. It is above the mid Bollinger Band, consolidating on a weekly chart, exactly like Dow Jones. 2 weeks of long consolidation, box wise, same rules apply. Wait for the box to break open at 333 or 334 and then look for a new target. At 333, 334, wait for the box to break. Your first target will be 341, 342. Second target, 345, 347. But wait for the box to break at 333 or 334. Stop loss very clearly either the low here at 325, because this wick has tested it, and at 325, if you watch very carefully, it also happens to be a 200-day simple moving average. So for this week, for the first week of January 2023, my suggestion to everybody would be sit back with not one, but 2 mugs of coffee. Let the market move, give you a clear direction of what it wants to take, and only then enter the market. Because for 2 weeks, the DII, the institutions were not around. Retailers were playing. They kept it into a narrow range. Now when institutions come, they will be buying it and taking it up. So I don't expect them to come and sell just now. So keeping that perspective in mind, if you're a risky trader like me, I could take a position of understanding the psychology of an institution. They are sold in the 3rd week of December. They will now like to wait for a correction to buy a dip and then rally it up, because they are sitting on piles of money just now. There are a lot of cash lying with them, which they will like to deploy. So they might as well wait for a correction. They might give you a selling on Tuesday and Wednesday, or Tuesday at least, so that in that sell, they will bring the market down and then they will buy it and take it up. So if you must buy, wait for the first half of Tuesday to settle down. Let the selling settle down and then enter the trade in the last half of the day, or enter on Wednesday morning. Because that will give you a direction about, by that time, you will get a rough idea as to how institutions want to go about it. Clear? Sunita?
Yes, thank you. Yeah, I got it.
Got it? That should be the trend, I mean, for all of us now, to wait and watch.
Okay. Mhm.
Because simple reason, oh God, what happened to this? Is it a recent listing? Gaurav?
Next, this is
No,
the
sorry.
energy index.
Yahoo was giving me trouble, so anyway. It's an index.
So it's the Toronto Energy Index.
Yeah. I'm only getting one candle here for a day chart.
That's interesting.
I'm surprising it just happens. All right, so let's analyze it on a 4-hour chart. That is all right. Now, Gaurav, energy index, I think we were discussing this about 2 weeks or 3 weeks back also. Winter coming in, energy prices going up, and that is exactly what you see happening. But because there was no traders, no institutions, it has lost its volatility and the momentum. So now I'm expecting it to go up further up. But again, I'll be a buyer at the zone of 235 and above. 235, 236, stop loss 233 or 232. Buy around this level, the low of this level, 235, 236, stop loss 232. Higher targets can easily be seen in this. Your 200-day moving average and everything will go up. What's important to note over here is the price is above the 8, then comes your 40, or then comes a 20, and then comes a 40. So the fast moving averages are all lined up in the ascending order, which is very nice.
Right. And so I am looking at this one, more from a perspective of how the year is going to set up. Because, like you said, with winters coming in, the fuel prices would be a bit on the more than the prices, the fuel revenue would be on the higher side due to consumption.
Yes.
Uh, so I'm looking at some of the energy holdings that I have now. I'll compare them against the index and look at the how long I want to hold them. Probably just trying to set myself up for January and February. So it was more of a larger uh, time frame question.
Gaurav,
So
since you are being student properly, you will realize this. Current market levels is almost as this super trend level,
yes,
right? And that is the level at 243 or 244, where it is rejecting it and pushing it down multiple times. It did it over here
hmm
in the second week of December, did it over here around Christmas, before Christmas, and it is again here to test it out. Now, this is the third attempt they are doing to break open this super trend.
right,
Now, if you watch very carefully, this super trend is no more flat. It is slightly curved down. I will
correct,
expand and show to you. You realize this over here, super trend level is 235.74, and over here is 236.24.
hmm
So it's a 50 cent going up. There's a slight curving up. What is that indicating to us? This super trend level may get tested and may get breached and broken in a positive way. It's done 1, 2, 3, 4, 5, 6, 7. And now, after so many attempts, this resistance level will tend to become weaker if this breaks open, which high
Can you please
possibility
make
on.
the screen bigger?
Sure. Sufficient,
No, because
right? So you see this
Yeah.
1, 2, 3, 4, 5, 6, 7, 8. 8 times it has been tested over here. And now
right.
if it gets tested, my hunch is saying possibly not Tuesday, but by Wednesday, this will give you a breakout, a positive breakout. And if that positive breakout happens, your first resistance or target will be somewhere over here, 253, 255.
Yes, so that is what I was looking at as well, because it's not showing the day chart here, but on the day chart, the way I was looking at it is if it on a closing basis it closes above this level, then technically it's in a breakout,
Yes,
and the
it
setup
is.
looks strong for a breakout. So
But this
so
will be
yeah,
this will be a play for only a few months till the month of March
yes,
or April upper limit.
absolutely. I mean, I intend probably holding it. If I hold it, probably for a month and a half, not more.
Month and a half. This will be a very small trade for a up to upper limit of March or April. But
Right.
clearly, if this breaks out over here, which it will at 253, your first target is 254, 254. Second target after that, I'll have to now check it out this way. Second target 264. So first target, if this gets broken, first target is 254, 255. Second target $10 above at 265. And thereafter, you come into 272 or 271 range.
Right.
271 and then this at 276. Don't wait for that long. Don't be greedy, I would say. I would say 265 would be a good place to exit. 265, 266. Good place to exit because this is 268. 267, 265, all of them are one after the other.
Right, sir.
So once this breaks at 250, 244, 255, 265, 275, 276.
Right, sir.
All right. Tesla, Google, and TQQ. TQQ is already covered as QQQ. Why do you want to cover again, Kamal? Fresh demand.
Yeah. First request.
Let's say Google first. Now, all these stocks which Kamal is requesting, be it Google, be it Tesla, all tech-related stocks will move almost similar to NASDAQ. Almost similar. Again, and this is 1 second. Let's work this on a day chart. Google very clearly consolidating 85. If you must buy, your stop loss is 82 or 83 can be your stop loss. First target, it will go to fill this gap up. If it goes to fill this gap up, first target over here will be 95, 94, 95. Then this target here, 100.
But sir, wouldn't this have to first break the 8 moving average? It's
It has to
consistently
break
taking
it has to
resistance.
break,
It
yeah.
has, yeah. It's
It has to
consistently
break
taking
this.
resistance.
Yeah. It has to break this. But the only good point is that here your MACD has given you a positive breakout.
Right. Okay. Yes.
See this breakout? Crossover?
Yes, sir.
And the histogram is in positive zone. Similarly, CCI has come from the lows of 170 to minus 78, minus 80. Your stochastic has just given you from a single digit to a double digit breakout. 12 and 10. So indicators have just started to give you a breakout. So you could look at that as an aspect. Right? However, I'm looking at this date, which is 3rd of November. This will act like a very strong support for you at 83. So first buy around 85, stop loss of 82.50 or 83, first target 90, 94, thereafter 100 or 99. The weekly chart on Google, clear downtrend. Remember I was talking about touching the lower Bollinger Band, going sideways, falling, going sideways, and again falling. This is a true example of that. Look at this. It falls, touches the lower Bollinger Band, consolidates sideways, falls, consolidates, falls, consolidates.
And sir, mid Bollinger State's taking resistance also.
Of course. At mid Bollinger, you're taking resistance. Mid Bollinger is purely curving downwards. Every other indicator is going downwards. So Google over here or Alphabet, if 83 breaks, for any reason 83.50 breaks, your support will be over here, 70. So that is why Google playing at 83 is very clearly you are buying it with a very strict stop loss. 83.45 was the low on this week. Your stop loss will be 83. If you're buying Google with a gun put to your head at 85 or wherever you want to buy, 83 is a clear stop loss. And then target will be, first target here, 100. 95 and then 100. After 100, 110. But the weekly chart is clearly showing this to you. You will see this when you see this chart of me. Consolidating, falling, consolidating, falling. Again, it's in consolidation and 4 weeks of lower highs and lower lows. Let me show this to you the last 4 weeks. The entire month of December, and Google was lower highs, lower lows. Clearly in a downtrend. So this level of 83 or 83.50 or 86 will be tested and broken further down. And super trend, no more flat, has curved down. Weekly chart.
So the
Day
100
chart?
has crossed the 8 in a negative fashion.
Which one? Yes.
100,
100 has crossed 8.
100 or 200?
200 has crossed 200 has crossed 8 in a negative negative way.
And ready to cross mid Bollinger.
And in case if this 200 goes above the mid Bollinger, it will be a straight this thing. It's not a golden crossover, it is the death crossover. So Google taking care of Tesla. Tesla, we were discussing it, if I'm not mistaken.
Yeah, we had discussed it
Last week, and we had given you the targets where to expect it to. And I think it reached over there. I remember seeing a post on the chat. $112 to $123. Levels which had spoken in the last meet itself. When at that time, the price was 125. In the last week's video, somebody please go back and check it. It was at 125. We had given you a level of at least 112, which it will touch to buy. And it touched not 112, it touched 108.76. So 108 was a strong support over here to buy back. And from 112, it's already given you a 12% return in just 3 days or 4 days. But now Tesla is looking good because of this crossover in MACD and a positive histogram. And CCI turning flattish and climbing steadily, and stochastic giving you a first crossover at 15 and 8 and 9. Right? But this crossover being very far from the 0 line, don't expect this to really run up too high. Your targets over here, first target is at 136. Next target is around this level, 156. But that is only if 136 gets crossed. High probability 136 will be touched and brought down again. High probability touch 136 and come back again. Because this is also below the 8 moving average and waiting to climb up. And all your moving averages are in the reverse order. They are not in ascending, they are in descending order. So this is 40 on top, 20 below, and 8 below it. And 200 is not to be seen because it is at 252. So 99% it will touch 135, 136 and again fall back. So this will be a good trade, will be minute you see 135, 136 on spot, buy a put for 100 or buy a put for 110, at least 2 weeks away. When you see the spot at 135, 136, buy a put of strike price 100 or 110, at least 2 or 3 weeks away. That will give you a very good return with very minimal stop loss. And if the super trend gets broken and you go up, then please square off your puts in a loss. But I'm not expecting that. I'm expecting it to go up and come down. My gut says it will go up and come down because this crossover is not yet convincing. Not yet convincing. Clear? Kamal, you want me to do TQQ? TQQ exactly like its parent, QQQ exactly like its grandfather, NASDAQ. Crossover happened there. Look at the similarity in the charts of TQQ as well as the one we were just watching earlier. Higher highs, higher lows on a weekly chart. 4 black crows. You are already at the support level. Weekly support. Look at the low here, 1632, 1610. So a new low after this. So after 9th of September, 9th of October, a new low was formed this week at 1610. What is stopping it from going further lower? Now
Yes, sir.
weekly chart, take a monthly chart now. Yes, Gaurav. Yes, Gaurav.
So the question was same because it formed almost low of the year. What is the low that we can expect for reversal?
For reversal. All right. Now, in this case, then that is the reason why I shifted myself to a weekly chart, a monthly chart now. Now look at the monthly chart going all the way down. Super trend completely down. Where do you see a reversal first happening? Somewhere over here at about 10 or 11. At that point is the first monthly support. 8 and 10.15. So 10 is the first place, or 10.25 is the first place. I will now look for a monthly support. Now, month supports are very, very difficult to break. Very difficult to break. So if I was to trade TQQ, I would be a bulk buyer of TQQ around 10.50, 10.50. 10.50 or 11, I will be a bulk buyer. I will sell my house and buy TQQ. Right? Look at the indicators on the monthly chart. No chance of reversal. Histograms have already come to 0 levels. If this gives you further correction, this blue line will just not crossover, he'll come down. CCI levels 105, stochastic crossover in single digits, not yet done or just done. So I am still not looking. I'm expecting this to come down and I'll be a bulk buyer at around 1050 or 1075 with practically no stop loss. Why? Because a monthly support breaking is quite difficult. Now, this monthly low was made in the month of March 2020, which was 8. In April, it made 10.15. So I would be a buyer at 10.5 or 11 in bulk. Because when this touches 11 and TQQ, the fear in the market will be superbly good. One second, let me, can you put me spotlight on? Can you put this spotlight on my video?
Sure.
Thank you. So what will happen is, once TQQ touches 11, the fear in the market will be very high. When the fear will be high, that's the time to strike your iron, to strike gold. You can be a bulk buyer there with practically, and then at that point of time, it's a monthly support level, 1050, 1075, 1025, monthly support, buy in bulk. You could, but then if you're buying in options, buy far away options, not 1 month, 2 months, more. So that will give you the long run and allow your money to grow up fast. It will be available at throwaway prices and you can buy in bulk and hold it for about 2 or 3 months if required, or buy TQQ futures for a long expiry. So that will also be at a very, very discounted price. So buy it in at a monthly support. Monthly supports are going to be very important. They don't break that easily. I will again show the chart to you on the monthly support. Where has TQQ broken? Look at this level. This was the monthly support level over here for TQQ, 2975. It stayed there for quite some time and it gave you a bounce also. It gave you a bounce to go all the way to 39.40. So that is the extent. So had I bought it at the monthly support here at 28 or 20 or 27 or 29, it gave me a bounce on this, made a high of 35, made a high of 30, 34, made a high of 39. 3 months, it bounced up and gave you all that. Over here again, it made a high of 31. So even if I bought a 27 here, it bounced back all the way to 31. And then thereafter, it's falling now. So TQQ, since Kamal has asked for it, buy it around 11. Kamal, answers to you?
Yes, sir.
All right.
It's just that it's almost like 50% drop from current price.
Yes, it is. Yes, it is. And what could be the trigger for that? China, Vietnam, China, Korea, North Korea, South Korea. There are so many more openings up happening. Collapse of European Union. Ukraine war escalating further. 3 things I can think of immediately. right? US economy is in bad shape. 4 things. So you can have anyone triggering in that account. Anybody is saying we don't know who President Biden is. Enough. Any one major leader says that, enough to give you a fall through. And you very well know Russia, China, North Korea are all gearing up for that. Plus, don't forget, you have the US presidential elections coming up around the corner. And our old man, President Trump, ex-President Trump is again beating up the drums, getting ready to pull a few tricks out of his hat. So, politics being politics, anything can happen. Clear?
Yes,
Any
sir, which
questions?
would mean-
Anybody has any more doubts, any more queries to be done, either on YouTube or on call here?
So I was just saying that, which would mean you're saying the entire tech stocks would be dropping further.
Yes. As I've been saying that for the last almost about a month or so, that tech index is weaker than the broader markets. So if tech index is weaker than broader market, tech index can drag the broader market, US market down also along with it. And technology is always a bubble waiting for a new disruption to bring in an advancement into the field. That is highly possible. We have a lot of techies on the call here who can vouch for it. Tech industry has always worked in a disruptive manner in throwing out old technology and bringing in new technology. Be it the pagers, be it the mobile phones, be it the smartphones, each one has disrupted the earlier established player and brought in new technology, made it more easier. But it is disruptive. I'm sorry if I'm going to be hurting a lot of ruffling up feathers because of tech savvy people, but that is the way technology works, including Kamal, who's beaming away to glory, saying whether he agrees or not, he's beaming away.
So there's one more index for
Yeah.
artificial intelligence.
Artificial intelligence must be Gaurav. One second. What is? Munir has mentioned this. Yes, Munir. I'll agree with you on the RSI factor. Give me the code for the artificial index, please.
NQINTEL.
NQINTEL
NTEL.
or IL?
IN.
This one?
Does it show here? And this another.
Yeah. This is India index market. Sorry. NQIN. Go further.
INTEL. Maybe it's not there on Yahoo. You might have to open TradingView. It's not too old index. And there's one more, NQ Robo. Let me just type again.
When was this index started? Yeah, day chart, yeah.
It's about, I think, about 2 years.
2 years, it should be giving you the charts. Why is it not giving you the chart?
Can you try the other one?
One second. I am on nasdaq CT artificial intelligence.
Yes, this is the one.
Bouncing off from here. 1605. Tested the support trend levels. Clear. MACD crossover done. CCI climbing, but stochastic looking weak. Planning to
Sir,
give you a reversal. So when stochastic is giving you a reversal, it is touching the support trend and coming down.
Sir, can we see on daily chart or weekly chart? It's on 4-hour
It is
chart.
not showing me a chart on daily. That's why the highest is showing is 4 hours. And this is also just the last 2 days that it has rallied up. Otherwise, it was on a clear downtrend. This is 28th, 29th, and 30th. If you are selling this over here at this level of the support level of 1650, target could be this one, 1581 or 1580. And lower targets over here, 1542.
Sir, on trading view, it gives even on weekly chart and monthly chart, because it was actually, it started trading in October 2018 in Q Intel.
No charts available. Weekly and day chart not available.
Do you want me to share?
Yeah, you could do that.
I don't have.
Kamal is also not showing on the Webull as well, right?
I haven't checked on Webull, but I can see the chart on TradingView.
Yeah, TradingView it's showing monthly, even the yearly.
Yes.
You can share it across and we can discuss it then.
Sure. I will
But
share.
the trend looks down to me. The trend definitely looks down to me.
Yeah, it looks similar to nasdaq.
As I was telling you, I'm expecting a target of 1580 and then lower targets of 1540.
So it has not been able to cross the mid Bollinger Band on weekly chart.
Neither able to cross the Bollinger Band, nor able to cross the support trend levels at 1650, 1656, and just above the 8 moving average. So this could always correct down and fall further.
Yeah, even stochastic is still downward. On the daily chart, because Thursday was a green day for all the stocks. It had moved up by 2.5%. Most of the stocks on Thursday moved up by 2.5%. Still, the support level would be around 1590.
1550 or 1545 and 1580 or 1590. Yeah. I would say 1580. Yeah.
Look on the monthly chart, it's even further around 1450.
Monthly chart, look at the last 2 candles. What is it? Bearish engulfing.
Yes, the last one is bearish engulfing.
So what do you want to do after that? Let it fall down.
I was saying the support looks around 1450, which is almost about 200 points lower.
Look at the weekly support.
The weekly support is around 1535.
Yeah, so that is the support first. Weekly supports don't break that easily also.
Yeah, so still further 100 points
Yeah,
drop.
100 points down is when you could buy it for a quick spike up or quick bounce. Sell it again at about 1650, 1670, and again look to buy it lower.
You're close to 1700.
Yeah. If you're buying it at 15, 1530, 1540, take $100 profit and come down.
Yep.
Kamal,
But
how you are trading this? Like it's not available on IBKR as well. So are you trading through any other platform?
no, this is a request for analysis.
Oh, okay.
I'll have to check. It's not showing on IBKR.
No, it's not available on IBKR as well.
How about NQ Robo, which is robotics plus artificial intelligence?
And you,
So it looks to have similar pattern.
no, both are not available on IBKR as well. So maybe it's by the on futures only. Maybe I'm not sure because I don't see it on the Webull as well as IBKR.
It's not futures, it's index. Like we have NASDAQ index. So this is specifically for artificial intelligence and robotics.
Okay.
There are ETFs as well.
Okay.
Maybe I can check and share in the group. At least for Robo Intel, I had seen there was ETF. These are the two indexes for just for artificial intelligence, and the other one is artificial intelligence and robotics. Yeah, coming to analysis, the trend looks the same for both NQ Intel and NQ Robo. At least for NQ Robo, it had crossed the mid Bollinger Band on the weekly chart, reversed near the upper Bollinger Band. Currently in the downward trend, and you can expect it to drop further close to 1150, which could be the weekly support, or rather 1140. It was at this support level, but it has continued further down. So we can expect it to drop down further. If you look at this level, it had formed resistance at this level previously, which could be strong support if it drops to 1170, 1175, which is about 100 points from the current level. And as we are expecting NASDAQ also to drop further, it could drop in about 2 to 3 weeks time. So even for this, it would be good to just watch for now if we are planning to invest. From its high, it was high close to $2,000. So almost 800 points it has dropped. But still further downtrend is expected, so it would be good to just watch for some time. Vivek sir, would you like to add anything? If you're around.
Madi, you covered already, well covered. No, at this point, 1140 is what I'm going to look at for this one to come and touch. But that was
Yeah.
also the resistance way back in June 2020. To your right. No, the red, small red candle between the two. No. Come to me. Yeah. Slightly to your left, to your right. That's it. That was your resistance also at 1136, 1135 earlier there, which has been tested this year in the month of October.
These
That's
2
it.
months.
That's
Yeah,
it.
these 2 weeks. Yeah.
So that will be again a retest level. If it bounces back from there, you can look to buy it up. But that is also your low Bollinger Band.
That's right. Okay. Right. Anything else? Anyone on the call? Just stop sharing.
Anybody else? Any more queries? Any more questions? Any more analysis required?
Sir, how was the Indian market today?
I beg your pardon?
Sir, how was the Indian market today?
Indian market today was turbulent. As expected, it opened up, gap up, and closed near the high end of the day. So I'm expecting that market to continue in the upward trend for tomorrow also. So Tuesday, Wednesday, yes. Tomorrow being the Fin Nifty expiry, it will be volatile. Wednesday will again be positive. Thursday will be a correction day.
Okay.
But Thursday is the first expiry for the 2023.
Okay. Right.
They may give you a small correction there. And by that time is also when the institutions are coming in. As I explained to you, what will happen in your markets tomorrow, that's exactly what happened in the Indian markets today. The institutions came in, they opened gap up, they brought in selling, bought the prices down, almost touched Friday's low, and bounced back again from there to close to the high of the day.
Okay.
That is exactly what will happen when your market opens tomorrow also. The retailers are buoyant, so they may open flattish to slightly small gaps, but selling pressure with the institutions to bring the prices down so that they can buy it and load themselves. That will happen for the whole day. And last hour of tomorrow on your markets, the market may rally up. Or it will rally on
Tuesday.
Wednesday.
Wednesday.
Yeah, Tuesday. No, Wednesday.
Wednesday.
Sorry, Wednesday. That's the way markets are going to play out within the next 2 or 3 days. Because institutions have to buy. Since they have sold off their positions, they cannot remain in cash for long. They have to buy. If they have to buy, they will sell some more stocks, some more indexes, which they are currently holding, to bring pressure to drop the market, buy back, and then take it up later on. The normal trend of every institutional player will be this for tomorrow and day after.
Okay.
All right. Any more questions?
Sir, 2 more
Anita,
requests. Two more
Hitesh,
requests.
Moni, or any questions on the YouTube?
Sir, two more requests. Am I audible or no?
Yeah, you are audible. Tell me.
Yeah. One usual, I mean both Shopify and SQQ.
Shopify and
SQQ.
SQQ will be opposite of DQQ.
Yes, because of downtrend you had mentioned in TQQ, so interest is in SQQ. We won't be able to see on the longer trend because of the leverage. So we can see only on daily chart.
Look at SQQ on day chart. It's at the upper Bollinger Band. Support at 50, which also happens to be your 20 moving average and your 40 moving average, 49 and 49.36, and your 200-day moving average at 48, and your support trend at 48. So you look at the support base, 48, 49. Currently you're at 54. Last 2 days, downward trend, but that's a support. If I was to trade this, I would be a buyer somewhere here at 51 or at 50. Why? I know my 48, 49 will always hold back and wait for it to climb up further. Knowing fully well, NASDAQ is weak. Yeah. Now, it will fall down, test the super trend or the 200-day moving average because your MACD negative crossover is about to happen. Look at the falling histograms and the crossover about to happen. Look at CCI from the highs of 210, currently at 87. Stochastic has already given you a negative bearish crossover. So this will come down, but not much. Your previous support and support is at 49.60 here. Your moving averages are all at 48, 49. At 48, 49 or at 50, I will be a very strong buyer with 48 as my stop loss. By that time, you will have also seen how markets are reacting. So don't expect this to touch 50 on Tuesday or Wednesday. But shortly, yes. By the weekend or next week, yes. Not before that. Shop you want Toronto or New York?
The Toronto would be fine.
Remember, I was talking about a box formation in shop. I've been talking about a box formation since quite some months now. This is box formation on a weekly chart. Right from April last year all the way till now. Within the box formation, what are you moving between? 35, 36 and 58. Now on the weekly chart, you touch 58 over here, 60, and you're coming down. So be a buyer at around 37 or 35 for a target of 58. So buy at 35, sell at 58. I'll show this to you right here. Buy at 35, 36, sell at 55, 56. But very narrow range on a weekly chart will not come within 2 or 3 weeks. It could be at least a month or 2 of holding. Stochastic negative, CCI fallen, MACD giving you the negative crossover and very clearly en route to 35, 36. So still $10 more down. Weekly chart, day chart. Even in the day chart, this trend will not be seen. Clearly seen in the day chart also. Shopify, I don't think it is worth it. Even if it goes up temporarily after the last 2 days, the resistance over here is very clearly at 50 or 51. Even if you see this crossover happening and you feel nice, the resistance here is over here at 51. After that, 58, 59, and back to normal. Volumes are suddenly not there. Nothing is there. I don't see any reason of even thinking of analyzing Shopify. Not worth it. All right. Kamal, anything else?
I think we can take any last queries from members on the call.
Anybody has any queries? The shortest session we have had so far. Less than an hour.
No, sir, it's almost 1.5 hours. It's 12 o'clock here.
Oh, yes, 1.5 hours. Okay. But still one of the shortest sessions. All right, guys.
We are actually on time.
I would suggest open up your phones, open up your cameras. Let's see each other and see if you have any queries left. Is that Srinivas online? Srini? Good morning, Srini. You're on mute.
Srini, if you could unmute.
Okay, yes. Good morning, Nikin. I'm in northeast of US, near Connecticut,
Lovely.
Nice.
and yeah, doing a bit of portfolio management. So want to get into the Indian market, to be honest. It's kind of crazy here, right?
Very true. Indian markets are good, buoyant market so far.
Yeah, I agree.
All right.
Nice to know you. So, Srini, do you trade in US market only as of now?
Yes, exactly.
Okay. So, do you trade in uh, stocks and ETFs, or do you trade options as well?
Not much into options. Mostly stocks and ETFs. Yeah. Sometimes leaps I go, but not a kind of a
Okay.
short, no short, quick ones.
Yeah, makes sense.
Good.
Nice to meet you.
Yeah.
So,
So for
do
me
you
to
have?
get into the next meetings, I mean, what is the process? If you could share, Vivek? Can I say something? The subscription based, I can definitely join, and then.
Okay. So, usually we have this weekend analysis for members who are active and who do trading during the week. So these analysis we do to help them plan their trades during the week. And apart from this, we do have two courses for two kind of audience, you can say. One is for those who are new to North American market and would like to start trading either in the US market or in the Canadian market, focus towards the fundamentals and technicals, which can help them to start trading stocks, ETFs, or even crypto. The second course is for those who are active traders or would like to become active and professional traders, day traders, is the futures and options course, wherein the course is more focused towards introducing options from the basics and sharing some of the most used or applied strategies and scale that to futures for those who would like to take advantage of trading outside the market hours.
Oh,
So
nice.
the details of these courses are on our website, www.growmoneytrading.com. If you'd like to talk more about where you are and in which way this GMT group can help you, we can talk more. Myself, Kamal, and Vivek sir, and we have three more members. We can share more details, but you will find most of the information on the website. After this call, we can connect and talk in terms of your interest. And as you mentioned that you would like to trade in the Indian market. So Mr. Vivek Bhatia, he trades options in the Indian market. He's currently in Mumbai. Rest four members are here in Canada. Three
I'm
of
from
us
Toronto
being.
too.
Oh,
I'm originally from Toronto, so I moved to US.
nice. That's nice.
work.
So, yeah, three of us are here in Toronto. One of us is in Vancouver. So we make sure that members across different time zones are covered to instructor closer to their time zone.
Okay, perfect. So I will connect with you in a short while.
Yeah, we can actually talk in brief after the session.
Yeah.
And we can know more about you.
Sure.
As far as this session goes, sorry, Vivek, sir, you're saying something.
No, I was saying, I just trying to tell you that I hope Shani is on the WhatsApp group of the GMT groups.
Yeah.
So if he's on the WhatsApp group, he will have your numbers and he will know how to connect with us also.
Yeah. Vivek, if you can add me in, that'll be great.
Sure, definitely. We will help
Thank
you.
you.
Anytime.
Yeah. Okay. So sure, Srini, after this session, you can still remain on the call and we can talk further.
Yeah.
For those who are on call, if there are any stock request, stock or ETF or any instrument that you are watching, we can take that as the last one or two requests. before we end the session. Srini, if you have any request, we can include that in the analysis if that is not already covered.
I'm good for now. Thanks.
Great. Sunita, Hitesh, Gaurav.
NVIDIA, if possible, if you can analyze it.
Sure. So Vivek sir
Okay, thank you.
has already taken that on the chart.
Sunita, as per your request,
Okay, yeah, thank you. Thank you
this is
very
the
much.
one.
Yeah, NVIDIA.
Two things. Weekly chart looking bullish because the support trend is still green, but turned flattish. So your support over here is at 127, which is your support trend level, or 130, right? It will come down because MACD crossover on the negative side is almost certain. CCI is coming down and stochastic is definitely crossed over. So look for support trend reversal levels at 130. In case the 130 breaks conclusively on a closing basis, your base support is 108, 110. Your target is 108, 110. If this breaks, 108, 110 is a short. Another good thing about why it will break is 3 black crows, a gravestone, followed by a marubazu, then by a dragonfly, but a red dragonfly. But again, lower highs, lower lows, weekly basis. So which is why expect it to come down up to 110, 112. Weekly chart. Don't do it in 1 day or 2 days. It will take a few weeks. Day chart, it has consolidated over here at the lower Bollinger Band, consolidating may give you a spike up to 148, 149. In case if it gives you a spike up, your resistance is at 159. Though I don't expect that to happen because look at the fall. Look at this Marubazu. 3 days of movement and it could not break the high of the Marubazu, which is at 151. The highest it made was 146.83. It did not break 151. So this 151 is your first resistance. Next resistance is at 159 or 160. Highly possible, consolidate and fall further. In falling further, as we have seen the weekly chart also, it falls further from here. First target 127 and then thereafter 110. First target 127 and then 110. Right?
Yeah, got it.
Look at this MACD lines in the day chart. Histograms are reducing in size. Crossover not yet done. CCI trying to go up, but flattening it out. Stochastic crossover done, but not with volumes. Not with volumes.
Yeah.
So expect a downward movement further up to 110 at least. But it will take some time. It will not be. Right? Sunita helps you?
Yeah. That helped me a lot. Yeah.
Love.
Thank you very much. Thanks for the
Also,
analysis.
Anybody else? Let me sum it up for you. Markets are going to be range bound. Markets are going to be in a bearish tone till first half tomorrow. Possibly last hour tomorrow, you may see a turnaround and a run in a spiking upward manner. But be very careful. For this current week, my suggestion is watch the market, wait for the market to give you a clear-cut direction. I do not mind buying expensive, $1 higher, provided I know my low has been firmly made. It is worth waiting. Sometimes sitting on your hands, sitting on your cash is also a strategy of trade. And in this scenario, that is exactly what will help you out. Don't be in a rush to enter any market so far, unless you are watching the market minute to minute. Don't be in a rush to enter the markets. Take your time, you will do well. With that, I will wish you all a very prosperous year ahead. And hopefully, you all will trade at the edge, with the edge, and we will meet to our targeted destinations altogether. Right? So that's it. Thank you from my side. Any questions? I'm open for questioning and open to help. Thank you.
Thank you, Vivek sir. And with that, wish each of you who has joined the call and who will be watching our sessions on YouTube a very happy new year. And along with Vivek sir, I wish you all a prosperous year. This year, as Vivek sir had earlier mentioned, we expect stock markets to be doing well. So hopefully you all have started planning your new contribution rooms to invest in right instruments, which could help you grow your money in this year 2023. So with all the good wishes, hope you all have nice remaining part of your holiday. And as the market starts this week, hope your accounts also start getting your attention, and we'll meet again in the next analysis session. Till then, take care and we'll talk again next weekend. Thanks.
Thank you.